As of December 10th, 2025, the XRP community is abuzz with talk of an impending supply shock. In simple terms, a supply shock occurs when the available supply of an asset drops significantly while demand rises or holds steady. A recipe for a potential price surge due to scarcity. For XRP, recent developments have made this more than just hype. Exchange reserves are plunging, institutions are accumulating, and new investment products are rapidly soaking up XRP from the market. In this deep dive, we'll explore why the supply shock narrative has gained traction now, how I personally searched for proof of it, and what it could mean for everyday XRP holders and the asset's long-term potential. Over the past few months, XRP has entered a new phase of mainstream adoption, setting the stage for a possible supply shock. A confluence of factors is tightening the supply of XRP available for trading. Here are the key drivers behind this narrative. Massive withdrawals of XRP from exchanges are yanking millions of tokens out of immediate circulation. When users move XRP into self-custody, those coins leave the sellable supply on order books. In fact, just this week about 216 million XRP, approximately $556 million worth, were pulled off exchanges, a sign of growing investor confidence and long-term holding. Less XRP on exchanges means fewer coins available for buyers, tilting the supply-demand balance upward. Large institutions and funds are accumulating XRP for the long haul, effectively taking those coins off the market. Whether it's banks holding XRP as liquidity for cross-border payments or asset managers storing XRP in custody, these holdings become high-stakes digital hibernation, not actively traded or easily accessible to the market. Once in cold storage or treasury accounts, that XRP is as good as removed from day-to-day supply. The expansion of XRP's use cases is also siphoning supply into long-term locks. Decentralized finance protocols on the XRP ledger require XRP to be staked in liquidity pools, used as collateral, or bonded in smart contracts. Similarly, if Ripple's payment corridors see wider adoption, financial institutions must pre-fund those payment rails with XRP, effectively reserving chunks of XRP for operational needs. All this XRP locked-in DeFi or payment infrastructure is off the speculative table. It's busy doing work and not up for sale. While not active now, the community has floated ideas of introducing token burns to XRPL's governance. Even a modest ongoing burn, for example, destroying a tiny fraction of XRP per transaction or via smart contract rules, would, over time, compound into a meaningful reduction of total supply. This wildcard isn't guaranteed, but it remains a plausible future mechanism to increase scarcity. Last but not least, the mindset of XRP holders plays a role. A narrative shift towards seeing XRP as a long-term store of value can lead to retail hoarding, people simply refusing to sell, come what may. As more holders develop diamond hands, the liquid float, coins actually circulating and available, dwindles. In effect, the community can create a supply crunch by collectively choosing to tuck away their XRP as a reserve asset rather than a trading chip. None of these factors alone guarantees a supply shock, but together they paint a compelling picture. In a market often focused on inflation and new token issuance, the idea of a hard supply squeeze stands out. When what everyone wants suddenly becomes harder to find, the price tends to discover a whole new reality. This is why the supply shock narrative matters now. Multiple scarcity drivers are converging just as demand for XRP is ramping up. A prime example of surging demand is the advent of spot XRP exchange-traded funds in late 2025. The launch of several United States XRP ETFs opened a new chapter for XRP adoption. allowing stock market investors, including clients of major brokers like Vanguard, to get exposure to XRP. Crucially, every spot ETF must hold actual XRP as backing. They can't use IOUs or derivatives. They have to buy real XRP on the open market. This has created a steady drain on exchange inventories. Conversations about a looming supply shock really intensified after the first XRP ETFs went live, especially as data emerged showing exchange reserves dropping on platforms like Binance. Let's dig into that data, which is exactly what I did in my personal investigation. I'll admit, the supply shock narrative sounded exciting, almost too good to be true. So, I went looking for hard evidence. Was XRP truly becoming scarce in real time? To find out, I dove into on-chain metrics, exchange data, and expert analyses. What I discovered was eye-opening. XRP reserves on Binance, the purple line, hit a one-year low in late November 2025, even as XRP's price, shown as a grey line, held in the $2 to $3 range. This steep drop in exchange-held XRP, a 45% decline over just 60 days, signals that far fewer coins are available for sale on exchanges than just 2 months ago. Between the end of September and the beginning of December 2025, the total XRP balance on exchanges plunged from about 3.95 billion to only 2.6 billion XRP. In other words, nearly half of exchange liquid inventory vaporized in 2 months. Such a dramatic drawdown is strong proof of a developing supply squeeze. Much of this outflow has been traced directly to the new ETFs and other accumulators. For instance, Binance alone saw roughly 100 million XRP withdrawn in the days immediately following the first United States ETF launch in mid-November. On-chain analytics firm 𝗗𝗶𝘀𝗰𝗋 noted that the timing wasn't coincidence. It aligned precisely with the official launch of spot XRP ETFs in the United States. It's not just Binance. Across multiple major exchanges, XRP balances are at or near multi-year lows. This indicates that XRP is quietly being absorbed by long-term holders who prefer to keep their assets off exchanges, in private wallets or custodial solutions. Even retail users appear to be joining this exodus, likely in anticipation of higher prices. As one market analyst put it, fewer tokens available on trading platforms, combined with growing institutional demand, create a potentially powerful setup for XRP. One of the clearest pieces of evidence came from tracking ETF activity. In the first 8 days after United States XRP ETFs were approved, the ETF issuers collectively bought over 1% of XRP's total circulating supply to back their funds. This equated to roughly 500 million XRP being removed from public circulation in just over a week. A massive scoop of liquidity off the open market. It's no wonder exchange inventories dipped so sharply. As a report on December 4th confirmed, at that point XRP spot ETFs had already purchased about $906 million worth of XRP, roughly 500 million tokens, and were steadily draining exchange inventory day after day. In fact, Binance lost about $640 million worth of XRP from its exchange wallets around this period. Almost the exact amount that flowed into the new ETFs, suggesting a direct transfer of coins from public markets to ETF custody. Beyond ETFs, I also found evidence of new wallets and on-chain activity consistent with institutional preparation. Over a single weekend in late November, more than 40,000 new XRP wallets were created, many of them by known custodial platforms or institutional accounts. Blockchain sleuths believe these wallets belong to enterprises gearing up to use XRP at scale, possibly to comply with upcoming regulations like the anticipated 2026 United States Clarity Act that could fully greenlight XRP's use in finance. If big companies are indeed preparing to transact in XRP, they will need to hold significant XRP in reserve, further tightening the available supply. This aligns with analyst 𝗗𝗀𝘀𝗰𝗍's prediction that companies adopting XRP for cross-border settlements will hold XRP as working capital in operational accounts rather than on exchanges, effectively removing those funds from circulation for the long term. I also checked Ripple's own actions, since Ripple Labs still controls a large escrow of XRP. Interestingly, Ripple appears to be exercising restraint that aids the supply situation. The company has little incentive to flood the market with XRP, especially now that demand is rising. In fact, unused XRP from Ripple's escrow releases are often returned to escrow rather than sold, keeping net new supply tightly controlled. This escrow discipline means the growth in circulating supply is relatively modest and predictable, so it doesn't counteract the current wave of absorption by ETFs and holders. Not every data point was unambiguously bullish. I found some nuance too. For example, one expert cautioned that ETF buying doesn't automatically spike the price in the short term. Why? Because as ETFs buy from the open market, Ripple's scheduled escrow sales each month add some supply at the same time. In other words, initially the ETF demand is largely soaking up the XRP that Ripple releases, rather than outpacing it. ETF managers cannot buy XRP directly from Ripple or escrow. They must buy from the open market. This means price may not rise sharply at first, as Ripple sells its monthly escrow, while ETFs absorb that supply at a similar pace, analyst Vincent Van Code explained. This insight suggests that the real shock in price may come if and when external demand grows larger than Ripple's planned releases. At that point, buying pressure would overwhelm any new supply, and prices could move rapidly. So, did I find proof of an XRP supply shock underway? Yes, the early signs are all here. Exchange balances are plummeting and have hit their lowest levels in years. Major new investors, ETFs, institutions, and possibly corporations are actively soaking up XRP faster than it's being created, which is precisely the imbalance that defines a supply shock. XRP's price, meanwhile, has been relatively stable in the $2 to $3 range through these absorption events, a calm surface that may be masking a building pressure beneath. This situation is reminiscent of late 2017. Back then, XRP's circulating supply on exchanges quietly collapsed in the months before the price exploded from a few cents to nearly $3.50 in a matter of weeks. History doesn't repeat exactly, but it often rhymes. The data I uncovered suggests XRP is entering a similar structural squeeze. The powder keg is being loaded. If demand continues to rise or even remains robust, the stage is set for potentially explosive moves. For everyday XRP holders, all this talk of shrinking supply and rising demand is more than just interesting trivia. It speaks to XRP's long-term potential. A true supply shock, if it continues to materialize, could have profound implications for price and for the strategy of holding XRP. First and foremost, Economics 101 tells us that when supply drops and demand climbs, prices tend to increase. If XRP keeps getting harder to find on the open market, buyers, whether retail or institutional, may have to bid higher and higher to persuade existing holders to sell. We're already seeing analysts factor this into their price targets. Some have set near-term targets around $5 for XRP, citing the record low exchange reserves and surging interest from ETFs and whales. In fact, XRP briefly touched the mid-$2 range recently, and projections of a move to $5 imply roughly a doubling from those levels. That's not implausible given that exchange liquidity has shrunk so much. even modest new inflows of capital could have an outsized effect on price now. More bullish commentators go even further. Citing the combination of ETF inflows and constrained supply, some crypto researchers suggest XRP could realistically reach 2-digit or even 3-digit prices in a full-blown supply shock scenario. For instance, one analysis based on a JP Morgan forecast noted that up to $8 billion might flow into XRP ETFs in their first year, with only around 3 to 5 billion XRP available on exchanges. Such large inflows could create an acute supply shock and push XRP's price to the $20 to $100 range over time. Those figures are speculative and not guaranteed by any means, but they illustrate the dramatic upside some foresee if XRP's scarcity meets a wave of mainstream demand. At the very least, the trend reinforces the idea that holding XRP long-term could be rewarding if the supply-demand imbalance continues to tilt in favor of scarcity. Beyond price appreciation, there's a validating message here for XRP's long-term believers. The fundamentals are strengthening. Institutional adoption and on-chain utility are rising, which adds credibility to XRP as more than just a speculative token. When you hear about tens of thousands of new wallets for institutional use or major companies considering XRP for treasury or payments, it signals real-world use cases backing the asset. This kind of growth in utility can create a positive feedback loop for holders. As more XRP gets locked up for practical purposes, whether in DeFi, enterprise use, or new financial products, the available float shrinks, potentially driving price up and attracting even more interest. It's a virtuous cycle that long-term holders hope for in any crypto project. XRP seems to be on the cusp of such a cycle now. Of course, seasoned investors will recall that no rally comes without volatility. Even with a supply shock thesis in play, XRP's price can and will have pullbacks and shakeouts. We just saw one at the start of December, when XRP dipped over 7% in a day amid broader market profit-taking. Patience and perspective are vital. The supply shock narrative suggests a structural upward pressure, but timing is uncertain. It might take weeks or months for the full effect to play out in price, especially as some forces like Ripple's monthly token releases may dampen the immediate impact. For everyday holders, the takeaway is to stay informed and consider the long game. If you believe in XRP's use case and see the data pointing to growing scarcity, that can reinforce the decision to hold through short-term noise. In summary, the current state of play implies that XRP's long-term potential is arguably stronger than ever. A genuine supply crunch appears to be forming, and if demand from retail users, institutions, and now ETF investors remains strong, the basic laws of economics are on the side of XRP holders. As one crypto analyst observed, once exchange and OTC inventories get thin, buyers will be forced to compete for a shrinking pool of tokens, driving prices higher as demand outweighs supply. That is exactly the scenario XRP holders have been waiting for. We may be entering that era now. If you're convinced that XRP's future is bright and a bullish wave is on the horizon, it's wise to get prepared. Here are a few steps and resources to consider as an XRP investor. Stay informed and connected. The crypto landscape moves fast. Join our free Discord community to keep up with real-time discussions, analyses, and updates on XRP. It's a great place to ask questions, share insights, and learn from fellow XRP enthusiasts. Being part of a community can help you navigate hype versus reality and make informed decisions during volatile times. Diversify your exchange. Access. One lesson in crypto is don't put all your eggs in one basket, and that includes exchanges. It's prudent to have accounts on multiple reputable exchanges, both for backup and to seize opportunities. In fact, I've partnered with Kraken to offer a special promotion for those looking to broaden their exchange options. If you sign up for a Kraken account using our referral link and trade at least $100 worth of any crypto, excluding stablecoins, within 30 days, Kraken will reward you with $25 in XRP. This is a limited time offer designed to give you a head start on accumulating more XRP. Essentially, you invest $100, for example, buying XRP or another coin on Kraken, and you'll receive an extra bonus of XRP in your account. It's not only a nice way to boost your holdings, but also a chance to test drive a top-tier exchange ahead of the next bull run. More details and the sign-up link are available on our website and in the description. Be sure to check the full terms and conditions on Kraken's site to understand eligibility. Setting up an extra exchange account now, when things are relatively calm, means you'll be ready to go when the market really heats up. Explore passive earning with Unity nodes. While holding and buying are the primary ways to increase your XRP stack, there are also innovative projects that allow you to earn crypto passively. One experiment I'm currently involved in is Unity nodes. This project lets you turn an everyday device, like a smartphone, into a mini network node, contributing to a decentralized telecom network and earning rewards in crypto for doing so. Think of it like mining or staking, but for providing real-world network services via your phone. The rewards aren't specifically in XRP. They come in other crypto tokens tied to the network. But it's an additional way to diversify your crypto income streams. The Unity initiative is still early and somewhat technical, but I mention it to highlight the creative avenues opening up for crypto enthusiasts. By running a Unity node license on a spare phone, I'm testing how much passive yield I can generate, and any crypto earned could potentially be swapped for more XRP down the line. We'll be sharing updates on this Unity nodes test strategy in the Discord, so feel free to join and learn more alongside us. Exploring such opportunities now, during the build-up phase of the market, can position you well when the frenzy kicks in. Maintain security and compliance. With growing value comes growing responsibility. Make sure you're using hardware wallets or secure custody for your long-term XRP holdings. Enable two-factor authentication on exchange accounts and keep your recovery phrases safe. Also, keep an eye on regulatory news, like that potential 2026 Clarity Act in the United States, that could affect where and how you hold or use XRP. Being prepared isn't just about having more XRP. It's about protecting what you have and being able to act when opportunity strikes. This might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. The XRP supply shock narrative is no longer just speculative chatter. It's backed by data and real developments unfolding right now. We've seen that narrative shift from theory to practice in recent weeks. Exchange supplies dropping, ETFs and institutions aggressively accumulating, and infrastructure being laid for wider XRP usage. For XRP holders, this is vindication of patience and conviction. But it's also a call to remain diligent and strategic. If the trends continue, XRP's scarcity could become a dominant theme in the next bull run. In such a scenario, those who did their research and positioned themselves wisely may reap significant rewards. At the same time, remember that crypto markets can surprise us, both to the upside and downside. It's important to combine optimism with caution. Use this period to educate yourself, join communities, follow credible sources, maybe even reread the official reports and analyses we cited here, so that you understand why XRP might climb, not just that it might. In closing, XRP's long-term potential looks more promising than ever. The pieces, legal clarity, institutional acceptance, technical utility, and now a possible supply crunch, are falling into place. Whether you're a day one XRP Army veteran or a new holder curious about the road ahead, these developments should encourage you to pay attention and think long term. The coming months could be very exciting for XRP. Stay safe, stay informed, and happy holding. Don't forget to subscribe. I'll see you in the next video.